This is part 2 of What is Accounting, and we will be focusing on how accounting tells financial stories. In the previous video, we said accounting is telling the financial story of a business using the tools available to an accountant. Well, what are those tools? These tools are called the 4 financial statements. These include the income statement, the statement of stockholders' equity, the balance sheet, and the cash flow statement. You will learn more about these statements in detail later in the course. For now, let's look at the financial stories of 3 companies using the income statement. This is the income statement of a company. I want you to look at it and determine whether this income statement is telling you a good story about the company or a bad story about the company. To keep it simple, we will just look at revenues. Revenues are earnings a company receives from selling products and services to customers. If you look at the income statement, you will see 2017, 2018, and 2019. You also see the amount of revenue the company earned in each one of those years. Generally, we want to see revenue increasing year over year. Also, you will notice at the top, it says in millions. This means you take the revenue numbers and add 6 zeros. So in 2017, the revenue is really 55,137,000,000 or $55,137,000,000. In 2018, the number is really 59,434,000,000 or $59,434,000,000. In 2019, the number is really 69,570,000,000 or $69,570,000,000. So in 2017, this company had 55 billion in revenue. In 2018, this company increased to 59 billion in revenue, and in 2019 it increased to 70 billion if we round up. So is this a good story or a bad story? Since revenues are increasing, it definitely isn't a bad story, but revenues didn't increase by a large amount. So I would say it is more of an average story. So what company is this? This is Disney. Let's look at the next company. If you look at the top of this page, you see in thousands. So you will only add 3 zeros to the end of the numbers. In 2017, this company really made 11,692,713,000 or $11,692,713,000. In 2018, revenues increased to 16 billion if we round up, and in 2019, 20 billion. If you compare your 2017 revenues to the 2019 revenues, you can see revenues almost doubled in 2 years. It went from 11 billion to 20 billion. Can you imagine making twice the amount of money you make now in 2 years? Would you consider that a good story? I think you would. So yes, this is a good story. What company is this? This is Netflix. If you have a Netflix account, you have contributed to Netflix $20 billion in revenue. Let's look at the last story. This is in millions. So we will add 6 zeros to each number. In 2017, this company had 41 billion in revenue, rounding up. In 2018, 56 billion in revenue, rounding up. And in 2019, $71 billion in revenue, rounding up. Each year, this company was able to increase revenues by at least $15 billion. It didn't double in 2 years like Netflix, but it came close to doubling. Is that a good story? If your revenues almost doubled or your income almost doubled in 2 years, would you consider that a good story? Yes, you would. So this is a good story. I would say it is. What company is this? This is Facebook. If you have a Facebook account and have ever viewed a Facebook advertisement, you have contributed to Facebook's $71 billion in revenue. We have now looked at some examples of financial stories. Accounting tells stories using financial statements. When you learn accounting, you learn to create and understand financial statements. You learn to use financial statements to communicate the financial story of a business to the public.